In this module, we will look at ancillary money laundering offences. First, by way of context, we need to explain the content of the regulated sector. While the Proceeds of Crime Act applies to all persons, certain failure to report offences only apply to persons who are engaged in activities in the regulated sector. This is defined under the Proceeds of Crime Act, and key activities which may be relevant to you as a solicitor are the provision by way of business in matters such as legal advice about the tax affairs of another person, either as a firm or a sole practitioner, and legal or notarial services by a firm or sole practitioner involving the participation in financial or real property transactions concerning the buying and selling of real property or business entities, the managing of client money, securities or other assets, the opening of bank, savings or securities accounts, the organization of contributions necessary for the creation, operation or management of companies, and the creation, operation or management of trusts, companies or similar structures. Note that litigation is not covered within the scope of regulated activity in this schedule. The first ancillary offence is that of failure to disclose, contained under Section 330 POCA. The offence is that of failure to disclose to a nominated officer or the NCA, as soon as practicable after it first comes to your attention, knowledge or even suspicion of money laundering, where you acquired such knowledge or suspicion in the course of your business in the regulated sector, where you can identify the person who is engaged in money laundering or the whereabouts of the laundered property, or even if you believe that the information received may assist in identifying that person or property. The